Hi, I'm excited for the first time to have Mr. Saurabh Mukherjea, author and Chief Investment Manager of Marcellus Investment Managers on Instagram on Salt&Paper Finance. They are a company which has just grown like a rocket with 12,500 crores of assets in just under 3 years. I'm so glad to have Mr. Saurabh here with us to answer some questions and to make us better investors. Saurabh, on your most active investment strategy, which is the consistent compounders, how do you break this down for our investors on Instagram?
So 3 straightforward things, Santosh, for your viewers. Firstly, you're looking for clean companies, promoters who are not doing naughty things with money. Secondly, looking for sensible management teams, people who make rational business decisions rather than buying random companies here, there and everywhere. And thirdly, you're looking for dominant franchises, monopolists, companies who have very strong pricing power. So clean, rational, dominant, that's consistent compounders for you.
You have a mid-cap offering as well, which is the Rising Giants. How do you explain this, and what do you think is the difference between the Rising Giants and the consistent compounders?
So look, consistent compounders are giant companies whose products all of us are using on a day-to-day basis. These companies typically compound cash flows at 25%. Rising Giants are around 1/6, 1/7 the size of consistent compounders. These companies are growing profits at 20%, but their cash flows are growing at 35%, right? So the difference is Rising Giants are smaller, they grow faster. The reason they grow faster is they squeeze their working capital cycle to grow cash flows faster, and therefore if you invest in Rising Giants, you get better compounding than consistent compounders.
Please, can you share the journey of Marcellus Investment Managers, your opening up of the office in the US recently?
Look, it's actually been quite a ride, but it's been a straightforward ride. A few of us got together 4 years ago, initially to actually just manage our own money because we were quite frustrated with the offerings out there. We started managing our own money. It seemed like a good idea to manage a few other people's money. Original thoughts were we would manage a few hundred crores. Lo and behold, that few hundred crores became 12,000 crores. And demand started coming in from Indians living in America that, look, we want this stuff for ourselves as well. So a month ago, the US regulator allowed us to set up an investment advisory business. So we have a small office in New York and we're regulated by the SEC as an investment advisor. So looking forward to doing our best for NRIs in America who want to invest in Indian stocks.
Your latest and another hugely successful book, The Diamonds in the Dust. For some of us who have not yet read it, and if we were to read it, what do you think are key takeaways?
I mean, look, the first thing we've tried to emphasize is this whole thing about buying flats and buying jewelry and putting money in fixed deposits. That's a bad idea. It doesn't take you anywhere in life in our country. Secondly, if you want to compound your wealth, obviously you have to look for good companies. The closest I can give you using a Bangalore analogy is Rahul Dravid. You're looking for companies like Rahul Dravid who compound steadily. Rahul Dravid famously compounded his batting average at 55. We're looking for companies that compound at 25. And thirdly, if you do this over a 20, 30, 40-year working career, you will make something like 1000x your money over a working career. So leave the old ideas about buying flats and buying bars of gold aside. Look for the Rahul Dravids of the investing world and do this over a 20, 30, 40-year investing career. You will make a great deal of money with very little downside volatility.
Just when the pandemic was coming to an end and now we have the whole Russia and Ukraine issue and we don't know what else is going to hit us tomorrow, what is your take on how does one navigate these times and yet be a successful investor?
Look, the world has always been uncertain. 100 years ago, there were things happening. The Second World War had just ended 100 years ago. A decade back, we were still recovering from the global financial crisis. As you rightly said, 2 months ago, we had a different crisis. Today, we have a different crisis. And I guarantee you, Santosh, a month hence, the story will be something else. That's the nature of the world. Our job as investors is to make sure that we give clients a portfolio which consistently compounds regardless of the exigencies. Why are they able to compound? Because these companies are selling the basic necessities of life, they're running the businesses in a clean, competent way, and they build products and services that the public cannot do without and have pricing power. By investing in such companies, we're able to power through exigencies like COVID, and as you would have seen, the portfolio has compounded nicely through COVID, and our reckoning is this strategy works nicely even in the current Ukraine crisis.
For all the viewers of Salt&Paper Finance and the millennials watching our platform, what is your take of an investment advice that they should follow?
I mean, look, I think everybody needs money, whether you're a millennial or not. You need to compound your wealth. To the extent you need to compound your wealth, you need money to live the good life. The sooner you start, the better, right? Money compounds over time. The longer your wealth compounds, exponentially richer you get. And the third aspect is knowledge on how to invest well is now so readily available, right? Whether it's Diamonds in the Dust being available on Amazon or webinars of all sorts being available on YouTube. Knowledge on high quality investing is available. Soak up the knowledge and get compounding ASAP, so that by the time you're my age, you're already a millionaire.